brokers, carriers, and a two-tier market that splits the coaching E&O world into one starting point and a different one. That's the architecture you need before any broker call. The unit walks the broker versus agent distinction, the two tiers of the carrier market, the AI exclusion risk that's emerged in some policies since 2023 and 2024, the broker evaluation criteria, the questions to ask, the red flags, and the higher trigger. Module 14.1 picks up the deep coverage analysis after you have quotes in hand from the broker exercise this unit lands. Insurance is the one area in this module where what you don't know can actively hurt you. What you don't know can leave you with a policy that won't pay when you need it. Not in an audit, where you can fix it after the fact. Not in a contract dispute, where you can negotiate. What insurance gets wrong looks like coverage you thought you had. Coverage the policy language doesn't actually contain, and a gap you discover after the engagement that caused the claim is already in the past. Two-tier carrier structure first, before you talk to anyone. A broker represents you, shops multiple carriers, helps you select coverage that fits. An agent represents one carrier and sells that carrier's products only, which constrains the recommendation regardless of whether the carrier fits your situation. For E&O as a solo coach, a broker is almost always the right call. The broker's compensation is built into the carrier's premium as a commission, so the guidance costs you nothing incremental compared to going direct. For solo coaches with anything beyond vanilla individual sessions, the multi-carrier shopping is where the broker earns the spread. Tier 1 is where most solo coaches start, and the descriptor is vanilla, meaning no contractor coaches under you, no AI in the delivery loop, no corporate platform deals. Carriers in this lane underwrite individual professional liability for straightforward solo practices, one-to-one sessions, group programs, retreats. The application stays short, and the underwriter does not need a special story. Westminster Global is the entry point worth knowing, because it is the ICF Affinity Program partner, and a current credential routes you onto a streamlined intake. Premiums sit in a tight band. The policy language is clean. Vanilla practices belong here without overthinking the choice. Tier 2 carriers are the subprime contractor end of the market, coaching businesses that function like staffing agencies or platforms, subpriming delivery through a corporate entity, corporate buyer plus subcontractor coaches doing the delivery. The Hartford's commercial lines for consulting businesses is one example. Premiums vary in this tier. Coverage terms differ across carriers in ways that matter. If you subcontract any delivery to other coaches or hold any corporate platform contracts, the broker needs to know that before quoting. The wrong tier quote will not pay on a claim arising from the subcontracted work. The AI exclusion is the newest variable in this market, and it surfaced inside the last 24 months. Picture a claim arising from a journaling app that summarized a session and produced a recommendation the coachee acted on. A carrier holding an AI exclusion endorsement can deny the claim on the language alone. Berkeley Professional Liability and Hamilton Insurance are the precedent carriers, with the language appearing in some of their policies. The pragmatic move is to name every AI tool inside the delivery loop: session summarizers, assessment platforms, journaling apps, to the broker in writing before the policy binds. 4 evaluation criteria score the broker, tuned for the coaching E&O market specifically. E&O placement experience for individual coaches or consultants, not primarily commercial general liability or property accounts. Can explain the coverage differences between Tier 1 and Tier 2 carriers when you ask. Will proactively raise the AI exclusion question without being prompted. That's a proxy for current market awareness. Quotes at least 2 carriers. A single carrier quote is selling, not shopping. The 4 criteria filter for a broker who's actually in this market. 5 questions land on every broker call, and the sequence is the part that pays. The first one asks which carriers the broker typically places solo coach professional liability with, and the why is the part that signals depth. The second asks for a quote against the ICF affinity carrier alongside the broker's normal suggestions. The third is the AI exclusion question, asked in writing, so the broker has to commit a position on paper. The fourth covers subcontracted delivery, meaning if another coach runs sessions under your contract, does the policy still respond? The fifth gets at per occurrence and aggregate limits and the differences across the carriers being quoted. 5 red flags disqualify a broker before you accept a quote. Quotes only one carrier without explanation. That's not shopping. Cannot explain per occurrence versus aggregate limits when you ask the question directly. Brushes off the AI exclusion question with probably not language instead of written confirmation. Doesn't ask about your practice structure, subcontractors, AI tools, revenue level before quoting. Sends the policy document without a walkthrough call to go through the key terms before binding. Any one of these is enough to move to a different broker. The carrier market has enough brokers that calibration is not scarce. Hire trigger is before your first paying client. No exceptions. E&O is not a once you're established purchase. Coverage runs from policy inception forward. An uninsured engagement is uninsured regardless of how small or informal it felt at the time. The price of a year of E&O for a Tier 1 solo coach is genuinely modest compared to the legal cost of a single uninsured claim, even one that gets dismissed in the end. Module 14.1 picks up the deep coverage analysis once you have 3 quotes in hand from Unit 3.5's broker exercise.